And it is February 5th. It is a Tuesday. It's not 12 o'clock yet, so I'm definitely recording on the Tuesday. It's great to do that. And as you can see, things are getting a little crazy and out of hand here because we have again reached another new record. I have a couple of dividends coming in here from these funds. So crazy, crazy day. The corporate today is definitely uranium. We're going to scroll down here in a sec, but let's run through Apple. Of course, my gains from Apple are capped. As you can see here, even though Apple is up almost $300 in the day, down almost $300 in liability. If I never sold that call, I would have been up another $925. Uh, Such is life. Can't get them all. I've already capped out the wins at 165 here for Apple, so these money I will not be participating in any of those gains. Too bad. Moving on, EXK was flat, literally zero gain, zero loss. Um, Silver hasn't really made another. I'm hoping that it's just kind of consolidating here before another move higher. And also, by the way, I want to talk about fiscal policy a little bit and what people are saying and what my opinion is on the fiscal, quote unquote, fiscal policy and how it affects the market. So my reasoning could be wrong, by the way. I'm just going to share my opinion. Okay, let's take a look at the uranium stocks here. There we go. We have Energy Fuels with another blockbuster breaking, record breaking 8%. I don't know. I'm not very good at those. Um, it's already at $3.37, $156 gain today. Very good gains from Energy Fuels. And then we have URG is actually up today for a change, 5%. Another $23 from that, another 5%. And you can see Cameco, wish I hadn't sold that much. Cameco is up another $22, 1.7%. And we have URA, which is the ETF, my biggest uranium position. It's up $78 or 2.3% roughly. So that's what's going on. We also had Alibaba come up 3%, so that helped a little bit. And that's really why my portfolio jumped today $500 or so. Happy about that. Spotify modest gain as well. Now, let's get to the meat here. Why are people saying this? So, people are saying how last year, and I'm talking by people, I mean like mainstream or the financial news, and even people that are not in the financial news, they're saying how the tax cuts, the fiscal policy boost, they call it, is like a temporary injection of adrenaline, and how the stock market is going higher and higher for that year because of the tax cuts and how that's a temporary boost. But I don't understand what's so temporary about it. I mean, yeah, once Democrats come, they're gonna probably hike the rates back up on corporate, but the rate, the tax is staying low. It's not like the benefit of having low tax, corporate tax, is gonna go away this year. It's still here, you know. Yes, I understand that people are, projecting um, the future, earnings and appreciation in earnings because of those tax cuts, and they factor that in the initial boost because it's a long-term bet for a lot of investors, right? But the my there's another point out here that the companies who are benefiting from that extra cash, they can reinvest, and the earnings can have a more of an exponential effect. You know, they can use that money to reinvest in their own companies. They can use it for buybacks, even though buybacks, in my opinion, they're not that good to use for money. But um, I don't think that all of these tax cuts are really priced in. I think they're priced in for the earnings for 1 or 2 years, but not moving forward, for a longer time horizon. I may be wrong in this opinion, of course, But it just, especially after this crash in December, I don't see. Let me pull up SPY. If you look at this graph of SPY, let's take the year chart here. It doesn't look to me like, oh, this is really priced in. Well, let's pull up 5 year. You know, it doesn't really look to me like all of it is that priced in. I mean, this, especially on December 21st, it wasn't. It's pretty moderate growth, all things considered, especially compared to previous years. It's not that much of an advance. Yeah, right. 2016, 17 were a little bit extraordinary, but um, we've had bigger crack up years before. So I don't see it happen. My point here is that I think that there's so much money out there just waiting to go into the stocks. Like people are holding on to cash for dear life, especially over here in September, October, November. Before the crash, it was so predicted. This little dip in December was so predicted by everyone, mainstream, like big economists, hedge fund, anybody who went out on TV predicted this crash. There's tons of people holding on to cash, and I even watched videos about portfolio managers and how they're spreading, and they weren't invested in the stock market down here. They were like a third cash, a third bonds, third stocks, and they're just kind of doing this all-weather type of portfolio. And honestly, I don't think a lot of people participated in this rally, and they're looking to get in. And some people are waiting for this strength in order to get into this market. Yeah, all right. It's likely they will have at least a little bit of correction here, but I think there's just so much money out here, and especially with the Federal Reserve showing signs that they're willing to work with the market, that they're willing to get their arm twisted by the action of the market, and they're willing to keep the rates lower for longer, quote unquote. I really think that the, the money is just waiting to go into the U.S. and the U.S. has been so strong relative to other markets around the world, and it seems like this machine is working better than any other machine out there, which is another thing that mainstream people are saying. But my point is that people are just waiting to get in there, and I think warranted or not, whether or not the American economy is strong or not, people want to get in there, just waiting for opportunity, and I think that um, would be mistaken to underestimate the wave of dollars it's willing to bid up prices. All right. I mean, if you take it, it was the price of the S&P was higher over here in January, right, of 2018 than it is now. So it's going nowhere in a year. And people are willing to put money in here in January last year. Like, what's stopping them from putting money in now, right? Okay, anyways, that's my little rant about the markets and how I think that we're gonna have, the market's gonna battle with this wave of dollars that's looking to bid up prices. This downward pressure is gonna be a real big tug of war here. We're probably looking at a correction though for sure, but there's gonna be a tug of war. My prediction is that the markets are really gonna go nowhere for like 10 years, and I made that call actually over here last January in 2018 to a friend, and I didn't record it, but I have been talking about it throughout on these vlogs. All right, rant's over. I just wanted to show you guys new record for the portfolio. I want to log that in, make sure that it's on record because I'm definitely thinking I'm waiting for this correction to happen here in the relief rally. So we'll see how it goes. All right, 51,299.28. Great, feel great about that. But I'm bracing myself for the upcoming downturn. All right, that's it for now. Hopefully your gains are bigger than mine. I'll talk to you guys later. Peace out.